Welcome back to the channel. In today's video, we are going to break down a powerful reversal strategy specifically designed for the EUR/USD. Before we look at the charts, let's go over the core settings. We are using a 30-minute time frame with two simple moving averages, the 200 and the 21. Keep in mind, this strategy is strictly for long setups. The first thing we need to see is a clear change in momentum. We wait for the 21 SMA to cross above the 200 SMA, signaling a potential bullish shift in the long-term trend. Now that the trend filter is active, we look for our structural trigger. Identify the last swing high peak before the signal. This horizontal level will act as the threshold for our entry. Now we wait for confirmation. We want to see a green candle that not only breaks that swing level, but closes clearly above it, proving the buyers are taking charge. To filter out weak signals, pay attention to the candle's body. The close must be near its high, as this shows strong buying pressure and very little resistance from the sellers. For the entry, we are not going to use a market order. Instead, we place a pending buy stop just above the high of the signal candle. This way, we only enter the trade if the market confirms the bullish momentum by breaking higher. Protecting your capital is the most important part of any strategy. Place your stop loss slightly below the low of the signal candle. This provides a clear technical exit point if the reversal fails to hold. When it comes to taking profits, we aim for a high risk-to-reward ratio. A 1-to-4 target is our primary goal, but the strategy is flexible. Depending on your personal preference and the market's volatility, you can also opt for a 1-to-2 or 1-to-3 target. To maximize our gains during a strong move, we use a trailing stop. As the price moves in our favor and creates new structure, simply move your stop loss below each subsequent swing low. This allows you to stay in the trend as long as possible. Let's dive into a second example to see how these rules apply in a different market scenario. Once again, our first step is to spot that bullish crossover, where the 21 SMA moves above the 200 SMA. Before the price starts its real move, we must identify the last significant swing high or pullback. This level acts as our key resistance area and sets the stage for our potential entry. Here is the trigger we are looking for. A strong green candle breaks through the previous swing high and closes above it. This is a clear signal that the buyers are overwhelming the sellers. Notice the quality of this breakout. The candle closes right near its peak, which is crucial. It confirms that the upward momentum is solid and that the market is ready to trend higher. With our signal confirmed, we place the buy stop order slightly above the breakout candle. We don't chase the price. We let the market come to us and trigger the entry only when the upward momentum is proven. The stop loss goes right under the low of the trigger candle. By keeping it tight and technical, we protect our capital while maintaining an excellent risk-to-reward potential for the entire trade. Look at the explosive move that followed. While this setup offers massive potential, remember that 1-to-2 or 1-to-3 targets are also perfectly valid. Consistency is key, and taking profits at these levels helps you build your account steadily. As the trend accelerates, we activate our trailing stop management. Each time the price creates a new swing low, we lock in more profit by moving our stop loss up. This is the best way to capture the meat of the move while protecting your earned gains. Let's walk through our third case study to see the strategy in action once more. First, we patiently wait for the SMA 21 to cross above the SMA 200, confirming the bullish reversal. Next, we need to mark the structure. We identify the most recent swing high or pullback level. This is the horizontal barrier that price must clear before we consider an entry. The signal is triggered when a strong green candle closes above that level. Notice how it finishes near its peak. This tells us that the bulls are in full control and momentum is building. Now we set up the trade. Place your buy stop order slightly above the signal candle's high and position the stop loss just under its low. This ensures we enter on strength with a well-defined risk. In this case, even if we maintain a prudent approach by setting a target of 1 to 2, you can see that this specific trade successfully reached a 1 to 4 risk-to-reward ratio. This shows just how much potential the strategy has when the trend is strong, even for conservative traders. To protect our gains as the price moves in our direction, we use an active management technique. We move our stop loss up, placing it just below each newly formed swing low. This allows us to follow the trend safely and lock in profit as the trade progresses. Now, let's break down our fourth setup for today. Mastering this strategy requires recognizing these patterns quickly as they develop. So let's look at this final example on the EURUSD. Once again, the signal is crystal clear. After the crossover, we get a strong green breakout candle closing above the last swing high and right at its peak, confirming the buyers have full control. We follow our rules strictly. A pending buy stop order goes just above the high, and our protection is set slightly below the signal candle's low to keep our risk well defined. Managing your exit requires a balanced approach. While we can't predict exactly how far the market will move, aiming for a consistent 1 to 2 or 1 to 3 reward ratio is highly effective. These rules are robust enough that, even while remaining prudent, the strategy often allows you to capitalize on much stronger trends when the market provides the opportunity. As the price surges, we simply trail our stop under the new structure. This trending move shows exactly why it pays to be patient and wait for the perfect alignment of our indicators and price action. In this case, the trade reached a full 1 to 7 return. By following these simple rules and staying disciplined, you can capture these high probability reversals and significantly grow your trading account. If you found this strategy helpful, make sure to like the video and share it with your fellow traders. Don't forget to subscribe and hit that bell icon so you never miss our future setups. I'd love to hear your thoughts. Drop a comment below to let me know what you think of this strategy, or tell me which other methods you'd like us to explore in the next videos. Thanks again for staying with me until the end. Success in trading comes from patience and continuous improvement. Keep learning, keep refining your skills, and as always, happy trading.